Markets are rallying after a surprise ceasefire in the Middle East, but the Fed remains cautious as tariff fears now loom large. Let's head to Florida now. We're joined by Brad Gastworth from Unearthing Opportunities. It's been a huge week, and yet it has felt like the markets have known something about what's happening in the Middle East that the rest of us haven't.
Yeah, I mean, it certainly tells us something with the market bouncing back so quickly, and we still haven't even eclipsed the time frame for the ceasefire to end. So it's interesting. I mean, obviously, President Trump was not happy with what happened as soon as it was announced. You still had that 24 hours where you had some escalation. But yeah, I mean, the market's telling you it wants to go up. This conflict was nothing by any means. It didn't fall back as much as it could have. And as soon as that announcement, we get a huge rally. It's really telling you this market wants to go much higher.
Gosh, those comments from President Trump, even people who aren't massive fans of him, I think took a bit of a step back. You don't often see the president dropping the F-bomb, at least in front of cameras. What did you make of all that?
Yeah, I mean, clearly he was disappointed, but I mean, look, I mean, the president also came in and bombed Iran. So, you can't really, say both sides and be upset, just 2 days after you bombed the country. Ultimately, he wants the ceasefire. I get it. He doesn't want them to have nuclear weapons. I get that as well. I do think, it's surprising that both countries have agreed. I wonder, what else has really been, spoken of that we don't know. But ultimately, I think that there was a major escalation that ended abruptly. And the market, again, isn't taking that risk factor and just going up to the right. So it's telling you it wants to go higher. We have a very big story with AI. The macro stuff hasn't really mattered much, and it was just a little blip recently.
It's been really interesting to watch that it's a little blip for the markets that the President of the United States orders the bombing of nuclear facilities in Iran. But that just shows us the weird world that we are in at the moment. Let's talk about oil prices because they went up and then they've gone back down, dropping by about 5%. What does this mean for inflation?
Yeah, I mean, I'm surprised by all of this. On the oil side, I wouldn't be surprised for it to sort of stagger and be volatile in this range. I do think inflation is going higher. I mean, I think it's almost impossible for it not to with the tariffs that are coming. Now, the big question, given how much President Trump does pay attention to the market, does he continue these pauses and pushbacks of some of those initial, tariff numbers? We might see that. And if so, the market's going to rally even more because it's telling us it wants to go higher. So I think unless we get more negative tariff news, which I do not anticipate at this time, I think there's it's hard to press to find downward catalyst currently.
Interesting comments we've seen from the Fed Chair Jerome Powell talking about the impact of inflation. Let's have a listen.
And I would say we would expect to see meaningful effects, kind of June, July, August. And if we don't, we'll be learning something. We have a highly adaptive, flexible economy, and it's certainly a possibility that the tariffs that we expect will come through in a much smaller level. We can't know that until we actually see it, but I think we'll be learning as we go, and if we see that, then that would lead us to want to cut earlier. The other thing that would lead us to want to cut earlier is if we actually did see some weakness in the labor market of a troubling nature, and we don't see that.
All right, more time is needed is the message there from Jerome Powell. How much pressure is there on the Fed and on that man at the moment from the White House?
Oh my God, Aaron, I think there's tremendous pressure. I think the president wants rates cut yesterday. So I think he's trying to buy himself time. Clearly, he's saying he needs to sort of study and see how things come as well. But ultimately, by giving that time frame, he wants to see impact, buying himself another 3 months at the earliest for anything that he does, in my opinion.
What about Bitcoin? Let's talk about Bitcoin at the moment because that's been the big one that we've been watching because it went down last week. Now it's back to 105,000 US dollars. It's interesting to see a time where there are calls because Bitcoin is often seen as kind of a luxury item, right? And so at a time where you've got the president calling for the Fed to cut rates because the economy is hurting, that isn't being seen in Bitcoin.
Yeah, I mean, it's a great point there, Aaron. I think the other thing that most people aren't talking about is that huge data breach that transpired. Whenever you see the data side being hit, and some bad actors going through security, most of that's paid in Bitcoin. So it doesn't surprise me that we see this little near-term upside. I also think that market's telling us something too. I mean, we've had so many negative news. We've had a lot of things that were concerning, but yet it's been incredibly resilient. I think it's hard to really fight it on the short side. I think you need to have crypto exposure. I think Bitcoin is going to win out long term, but I think there's still probably better entry points. But ultimately, yeah, I mean, right now the market's telling you that people want to own Bitcoin, and it's pretty resilient as well.
Yeah, and we're also seeing that proposed Republican bill on digital assets, whether it could actually bring clarity or more volatility on that one as well. Will be interesting to watch. Always appreciate your insights. Brad Gastworth there from Unearthing Opportunities. Talk to you soon.
Thank you.